January 29th, 2024. Inside a Hong Kong courtroom, a judge orders the dismantling of the most indebted real estate empire on earth. $300 billion. Gone. 1.5 million homes. Paid for by families who will never live in them. How does one man borrow more than the GDP of Finland? Imagine Guangzhou, 1996. The man you're looking at is 38 years old. His name is Hui Kayan. He grew up in a village in rural Henan, 600 miles north, where the road turns to mud when it rains. His mother died of sepsis when he was 8 months old. He was raised by his grandmother in a house with a dirt floor. He spent his childhood eating steamed buns and sweet potato leaves. He studied metallurgy. He spent his 20s at a state-owned steel mill in Henan province, working his way up from technician to shop director. Then he moved south to Guangzhou, where the air smelled like cement, dust, and money. And in 1996, he registered a small company called Hengda Real Estate. Here's what you need to understand about China in 1996. Private home ownership had been illegal a decade earlier. The whole concept of a personal apartment, owned by you, mortgaged by you, sold by you, was new. So new the legal framework barely existed. The cities were short of housing. The peasants were moving in. Beijing wanted skylines. So Beijing built a system. The system had 3 pieces. First, the pre-sale. You pay full price for an apartment that doesn't exist yet. The developer breaks ground later. You wait 2 years, sometimes 3, sometimes 5, and then, maybe, you get the keys. Second, the land. Local governments sold land to developers. By the 2000s and 10s, that single revenue stream covered 30 to 40% of every city budget in China. No land sales, no schools, no roads, no salaries for the cadres. Third, the implicit promise. Everyone, buyers, lenders, mayors, assumed Beijing would never let a major property company fail. The sector was too big. The political cost was too high. Property held up the floor of the entire economy. The system worked on 2 assumptions. Prices always go up. Buyers always come back. Hui Kayan walked into that system in 1996 with 1 office and 1 project. By 2017, he was the richest person in Asia. His first project sells out before the foundation is poured. He develops a method. Buy land on credit. Pre-sell the apartments. Use the buyer deposits to buy more land. Pre-sell more apartments. The flywheel spins. By 2003, Hengda is in 3 cities. By 2006, it's in 20. By 2008, it's in 50. He picks a new name for the company, Evergrande. In Chinese, Hengda, eternal greatness. In Guangzhou, his employees start calling him Boss Hui. He starts dressing the part. Tailored suits, a Patek Philippe. The car upgrades from a Buick to a Mercedes Maybach with curtains in the windows. November 5th, 2009. Evergrande lists on the Hong Kong Stock Exchange. The IPO raises $722 million on the day, oversubscribed 46 times in the retail tranche. The bell rings. The stock pops. Hui doesn't fly to Hong Kong for it. He watches from his glass office in Guangzhou. In 2010, Hui buys the local football team. He renames it Guangzhou Evergrande. He pours money into it the way only a man with a flywheel pours money. He hires Marcello Lippi, the Italian who won the 2006 World Cup. Then he hires Luis Felipe Scolari, the Brazilian who won the 2002 one. He pays them like Premier League managers. The team starts winning 8 Chinese Super League titles between 2011 and 2019, 2 Asian Champions League trophies, the most successful club in Chinese football history. All of it bought with apartment deposits. By 2014, Evergrande has projects in over 100 Chinese cities. Hui buys a Boeing 747. Not the kind airlines use. The kind that gets stripped and refitted with bedrooms, dining rooms, a gold-trimmed bathroom. One of the few private 747s in Asia. He flies it to Davos. He flies it to Beijing. He flies it home for dinner. October 2017. Forbes names Hui Kayan the richest man in Asia. Net worth, $42.5 billion. He's bigger than Jack Ma was the year before. His son's wedding reportedly cost more than $200 million. The guest list includes provincial governors and Hollywood actors. The catering bill alone could fund a mid-sized Chinese city's annual public health budget. By 2019, Evergrande's footprint is genuinely difficult to comprehend. 1,300 separate developments, spread across 280 cities, roughly 200,000 employees on the payroll. The wider Chinese property sector, Evergrande's industry, accounts for around 30% of Chinese GDP. One sector, almost a third of the entire economy. Hui appears on the cover of Time magazine's Asia edition. Tailored navy suit, hands in his pockets, a confident half smile. The caption frames him as the man rebuilding urban China. There's also a smaller, quieter business inside Evergrande that you need to know about. Wealth Management Products, WMPs. The company sells them to its own employees, to retail investors, to retirees in Chinese coastal cities. The pitch is simple. Lend Evergrande 100,000 yuan. Get 9% back, no risk. The company is enormous. Everyone knows the company. By 2020, around 80,000 retail investors are holding Evergrande WMPs. Total amount on the books, roughly $6 billion. In Beijing, a phrase starts circulating among policymakers. They use it in speeches. They use it in regulatory papers. Houses are for living in, not for speculation. Fang Zhu Bu Chao. Xi Jinping says it in 2017. He says it again. He keeps saying it. In Guangzhou, in his glass office, Hui Keyan keeps borrowing. Bond after bond. By the summer of 2020, Evergrande's total liabilities crossed $300 billion. Bigger than the GDP of Finland. Bigger than the GDP of Greece. Bigger than the GDP of Portugal. One company, one man's signature on the loans. And then the rules change. August 20th, 2020. The People's Bank of China and the Ministry of Housing release a single document. It runs 5 pages. It's called the 3 Red Lines. It says this. From now on, any property developer in China must obey 3 rules. 1. Liabilities cannot exceed 70% of assets. 2. Net debt cannot exceed 100% of equity. 3. Cash on hand must cover short-term debt. Cross any one line, and you can't grow your borrowing. Cross all 3, and you cannot borrow another yuan. The morning the document goes public, every property analyst in Hong Kong runs the numbers on Evergrande. Evergrande crosses all 3, not by a little, by a continent. The flywheel that built the empire requires endless new borrowing to survive. It cannot survive without it. On August 20th, 2020, the flywheel stops. What happens for the next year is a slow leak. Evergrande starts selling assets. Stakes in subsidiaries, land banks. Hui personally puts up his own holdings as collateral. The bond market starts pricing default. Yields climb. Then comes September 23rd, 2021. On that day, Evergrande misses a coupon payment, $83.5 million in interest, owed to offshore bondholders. The company stays silent. No announcement, no statement. The money simply doesn't arrive in the trustees' accounts. The international press notices. The headline goes around the world in 6 hours. Bloomberg, Reuters, the Financial Times. Evergrande misses a payment. 2 months later, December 9th, 2021, Fitch declares the company in formal default. Then 2022 arrives, and the protests start. Across China, photographs and videos begin appearing on Weibo, half-built apartment towers. Concrete that crumbles when residents push their fingers into it. Rebar bent at impossible angles. The Chinese internet calls it Du Fu Jia, tofu dreg construction. Buildings made of wet bean curd. Owners gather at the gates of Evergrande sites holding their pre-sale contracts above their heads. They're demanding the apartments they've already paid for. The local police don't quite know what to do. Then the buyers organize a mortgage strike. Across more than 90 cities, families stop paying their mortgages on apartments that will never be finished. The Chinese banks start to wobble. Country Garden, the next biggest developer, defaults the following summer. Sunac defaults. Kaisa defaults. Shimao defaults. The whole sector folds, one company at a time, like a row of bricks. On August 17, 2023, Evergrande files for Chapter 15 bankruptcy protection in a Manhattan courthouse, a procedural move to shield its U.S.-based assets from creditors. On September 28, 2023, Hui Keyan is detained by Chinese police on suspicion of illegal crimes. He has not been seen in public since. And on January 29, 2024, in a courtroom in Hong Kong, a judge named Linda Chan looks at the paperwork in front of her and orders the company liquidated. That's where you came in. $300 billion is not a number you can feel, so look at it from the ground. In Wuhan, a high school chemistry teacher walks past a construction site every morning on her way to work. Call her Liu Xiaomei. In April 2019, she signed a pre-sale contract for an apartment in that tower. 85 square meters, 1,200,000 yuan. Her life savings, her parents' savings, plus a 30-year mortgage. The handover date in her contract was December 2021. The tower stands at 14 floors out of a planned 32. It has been frozen in that exact condition since 2022. The cranes are gone. The site office is locked. The mortgage payments have not stopped. Every month she sends the bank money for an apartment that does not exist and may never exist. In Wenzhou, a retired electrician, call him Chen Guoping, sat in an Evergrande sales office in early 2020 and listened to a presentation about a wealth management product. 9% annual return, backed by Evergrande's commercial property assets. The company is too big to fail, the salesperson said. He invested 400,000 yuan, about 60,000 US dollars. His pension, his daughter's wedding fund, the lump sum from selling his old workshop. In late 2021, the payments stopped. There was no explanation. There was no recovery. There has been no recovery. Around 80,000 other retail investors are standing in the same line. The total hole in the Evergrande WMP book is roughly $6 billion. In Henan, Huikayan's home province, a small cement supplier named Old Wang ran a yard with 12 trucks and 40 workers. Between 2018 and 2021, he delivered concrete to 17 Evergrande sites. The invoices totaled around 11 million yuan. He was paid for the first 6. He was strung along on the rest with promises of next month, next quarter, next bond issue. When Evergrande filed for bankruptcy, Old Wang's place in the line of unsecured creditors was somewhere in the bottom third. He laid off his workers. He sold the trucks. The yard is now a parking lot. A teacher who pays a mortgage on a phantom apartment. A retiree whose pension funds a Boeing 747. A supplier whose unpaid invoices funded a son's wedding. Multiply each of those stories by tens of thousands, by hundreds of thousands. Spread them across 280 cities. That's the cost of $300 billion in liabilities. That's what an exploded balance sheet looks like at street level. In March 2024, China's securities regulator banned Huikayan from Chinese capital markets for life. They fined him $6.5 million personally. They fined Evergrande $580 million for inflating its 2019 and 2020 revenues by approximately $78 billion, a figure larger than the entire annual revenue of most companies on Earth. Hui himself remains in custody. His Boeing 747 has been seized. His football club has been sold off in pieces. Here's the mechanism. When a government makes property the engine of an economy, it makes catastrophe the cost of stopping the engine. Beijing knew this in August 2020. The Politburo knew the 3 red lines would expose every leveraged developer in the country. They knew Evergrande would not survive contact with the rules. They pulled the lever anyway. Why? Because the alternative, letting the flywheel keep spinning, produced something worse. By 2020, 90 million apartments in China were sitting empty, built, sold, never lived in. Investments in concrete that no family was ever going to occupy. A country full of unlived lives. So Beijing chose the smaller catastrophe. They chose Evergrande. They chose Country Garden. They chose tofu dreg footage and mortgage strikes and 1.5 million unfinished homes because the bigger catastrophe was already on its way. But this raises a question. What happens next in a country where 90 million apartments, one for every person in Germany, sit empty, unwanted, and worth less every year? What happens to the cities that built them? What happens to the young couples who can't afford to start? What happens to a country when the largest piece of household wealth quietly turns into the largest piece of household risk? That's the next story.